Good morning and welcome to today's edition of the London Session Open. Today is April 2nd, 2018, and my name is Alejandro Zambrano, Chief Market Strategist with ATFX.com. We're going to take a look at the markets as we usually do at this time of the day, and I'm just going to see what's going on. We have some interesting moves in the euro, actually, starting to approach its 2019 low. And just a little bit stealth right now. I think most people sort of focusing on cryptos right now and looking at that and sort of trying to figure out what's going to happen there. But I think, again, we could potentially have an interesting little move in the euro. So we're going to talk about that. Okay, I hope you had a good morning so far. And let's see what happens here with the euro. So this is the euro. And the market, as you can see here, is bearish. It's bearish over the last few days. We're approaching this major low here, which is the 111.77 level. Now, a break to that level would take the currency down to a new low. Now, the market has been very, very difficult to sort of gain over the last few days, sort of months really. You had a break to new yearly low here in August, didn't work out. This is August last year. Here's another break to a new 2019 low, got a little bit lower. But then this one here was a total failure in March here. So the appetite for short selling at the lows is not extremely high, but the relative growth right now, if we look at something like the PMI indicators, if we use the PMI indicators as an indication of growth, then there's a big divergence there where Europe is slowed down significantly, and then you have US growth that is really, really strong. So from that perspective, the currency has a bit to catch up here, really, and could potentially trade lower. Now, we'll see what happens, but usually when you take out a major low like this one, if you flip to the daily, weekly here, we trade down to the next major low. Now, I do know we have some lows here that could potentially act as support. I'm looking at 111.06, but beyond that level, this is sort of where support is at. So you're looking at something like 108.56 or so down at these levels. So that could potentially be the potential target here. Again, based on macro fundamentals and based on technicals. From sort of a trading perspective, if I were to trade and short this myself, I would probably just short sell on the break to the low, and then stop loss will probably go just above yesterday's high, so 112.56 or so. And if we indeed go lower, then you're looking at a risk reward ratio here of 3.83, which is quite good. If you risk 1%, you make 3.83% return here. So it's a decent risk reward ratio here on the break to the downside. As for GBP versus the USD, if we forget about the fundamentals for a few minutes, the trend remains bullish for now. And, it's bullish about 129.52. We talked about the market bottoming out here. It's better just to focus on the daily rather than going too short term here, because no one really knows exactly what's going on within these candles. I think most people have a longer term view, buying here, trying to sell at the highs, pressure forward. Dollar versus the Japanese yen narrowed down significantly. As you can see here, we're stuck within this mega big triangle, which could technically, if you look here at a monthly chart, it could technically just be the right shoulder in play here. It could just be that. It could be just working with that right shoulder on the monthly, and then we'll take out 124 and then go upwards. That would require, of course, a very, very strong US growth and just a proper bonanza, Maybe if a trade deal between US and China takes off and it's a really, really good one, then that could be something that could potentially cause this to trade substantially higher. But we're not there yet, and I don't think that's going to happen anytime soon. So let's zoom back into reality, or small time frames like the daily and the short term. This is stuck within the range, so this is not too much for us to do here. But if we take out 112.17 or maybe 109.70, then that could be something that could potentially cause a bit of a sort of more momentum and potentially tradable maybe something like this, but I would be very careful. I think the way this looks like, we'll continue to trade sideways for a few more months, I think. Maybe October or something like that, we'll have a break. Gold prices continuing to trade. I mean, this is a massive head and shoulders. You might remember a few days ago, actually, beginning of the month. Yes, beginning of the month. That's how slow the markets are right now. I wish I could wake them up for you guys, for myself even. Like I'm been very bored actually for quite some time. And here, you know, we talked about short selling here, as you know, already first week of March. The market did eventually go lower. It's now down here. Now, if you did short here, there's two things we can do now, or there's various things, but one is just book profit on all of it. The other one is just to maybe book 50% of profit and look for a break to the downside. I prefer booking profit on everything and then maybe selling on a break to 1280. That will be head and shoulders with your head, left, right shoulder. Alternatively, I think it might go up to maybe 1,300. And then I think people might short here. Now, I actually forgot to mention this, and it's about the risk disclaimer here. Please bear in mind that trading financial markets, unfortunately, is high risk, and we may lose all of our invested money. I know most of you guys are very well experienced, and just looking at the names here, I recognize all the names. So I know you heard this before, but for anyone watching this on YouTube, please note the risks involved with trading. Now, continuing to move along here, crude oil on fire, as I was hoping for. So we reached that red line. The red line was a target on the setup here. Okay, so on the break here, we had that target. Then I said on a break to this level here, which is 60.35, you have a smaller range. It's more clear from, say, the 4 hour, a 1 hour, and we had the break here and break to the upside here. Our turn lifts things to higher. Okay, 62.66. So that's the next target. And if you bought here, maybe a bit here, this is definitely a good spot to book profits. If you're not involved, you want to get involved, then I think 60.56. Right now, it feels like that's never going to be hit, but it will probably hit at one point. And at that point, that's when the time's to get involved. Much like here, right? We had the breakout, and then we said if it goes down to the breakout point, we want to be buying. It's the same thing here. If we go down to the breakout point, I think people will be buying. Here is the famous S&P 500, new 2014 high. Surprise to many of the bears. Not sure what Zero Hedge is writing right now, but these guys at Zero Hedge has been bearish since ever. Doesn't matter if the market goes down or up. What can I say about this? It's a bullish market. Should probably head upwards. Fib from low to high. You know, gives you this like a potential entry. If we buy down here and then target something like 2,900 or maybe 2018 high, then you're looking at a reduced stop, by the way, to this level here. You're looking at a risk-reward ratio 1.72. Hit that 2018 high, 2.88. German DAX. So the German DAX, big, massive head and shoulders. You know this is formed a ton of these head and shoulders. We had one here that I shared with you guys. This one here, left, right shoulder, bullish break. And we had this one here, left and right shoulder. And now this looks like another sort of mega head and shoulders, which suggests even higher and higher prices. Now this might be a bit confusing if you look at something like German PMI figures. You might say, well, hold on, isn't Germany having its third quarter of 0 to negative growth? Yes. Have another quarter, and it's been a full year of no growth. Okay, so clearly that's not good for the markets. Well, the market itself has been going down lower, so they move slightly lower before you have the bad news. Okay, so it goes down slightly before you have the bad news. So maybe what the market is now projecting is that maybe we saw the worst in the German economy. Maybe this is it. Maybe the German PMI figures that were published yesterday, let's check them out. Maybe that's pretty much it. And that's why we're trading what we are. Let's take a look here at PMI. This is manufacturing PMI. I mean, it's not looking good. So you see here the peak in December. Since then, down. Stock markets peaked. Actually, here the stock market peaked like 1 month later, and then it went down. So I'm not saying it's going to bounce, but if it does stabilize here, I mean, that would make sense given what we're seeing in the market. And, you know, maybe one year from now, the market is this is gonna be up here again. And then this is gonna be up here, and then it makes perfect sense. So let's not focus too much on all the negativity. Let's just focus what the market is telling us with the help of the charts. And what it is telling us is that we have a massive head and shoulders, and then a break up here probably is gonna lead to that break. Now, there's two ways of doing this. Just going with that breakout when it happens. Ideally goes down for a few days and then breaks up higher. Alternatively, I think this should be enough as low. You have that little pullback. Now, if I could choose, I would not choose the DAX. I would choose the S&P. And I think that's pretty much it. I think we covered most markets. If you do have any questions, you put them in the chat box. I want to thank you so much as well for all of you guys for joining me this morning. We have a solid crowd here. We have Sahid, Marvin, John, and always here in the chat. I really appreciate that. And of course, everybody else that is watching the recording on YouTube. Okay, so I think we're going to keep it short today. Guys, if you have any questions during the day, you know you're most welcome to reach out via Twitter at AlexFX00 as well. Don't forget to check out the ATFX website under analysis, technical analysis. I'm publishing some content here. So you want to check that out as well on YouTube. We have we have the morning briefs, which is down here, the morning webinars. Don't forget to like those. And here we have the front row. This is what we're calling it right now. Might change this later on. But these are some of these updates I'm doing here at the ATFX office. And here I'm actually talking about yesterday the Chinese figures and data, and then talking a bit about sort of some of the charts as well. So check that out. And the idea is that we're going to publish one of these videos every day, and then one of the morning brief every day. You'll find this on YouTube only right now, and on Twitter. Otherwise, yeah, that's it really. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow. Thank you so much, and have a great day. Bye-bye.